I like you too. And let me just say that you also serve at the pleasure of the Congress as well. And I don't think you have a problem because the President has said that he's for transparency. Every conversation I've ever had with him, he talked about the importance of transparency. So to me, you should be in good shape.
Thank you, Mr. Chairman, and happy birthday.
Thank you very much. I now yield to the gentleman from Missouri, Congressman Clay.
Thank you, Mr. Chairman, and happy birthday also.
I'm afraid this is making me even older.
Mr. Borowski, thank you for being here, and I look forward to your insight on questions that are asked frequently in Missouri's 1st congressional district. I did not agree with the original thrust of TARP, and am still troubled by some results that I see. One of the most important reasons for the legislation was to provide liquidity for businesses and homeowners as the ultimate benefit of shoring up the banks and investment houses. We are seeing large banks and investment houses experiencing exorbitant profits, but no relaxation of credit, no significant increase in liquidity. Why hasn't liquidity been restored to small businesses and individual consumers as a result of stabilizing these lenders? And do you find that too much of the monies and profits are invested in Treasury bonds rather than in monies made available for lending?
I think that the lack of transparency and the failure to adopt our recommendations regarding requiring the recipients to report on their use of funds makes answering that question almost impossible. Until we know with some degree of precision exactly how the financial institutions are using the money, it's hard to answer the question of why they're not using it to increase lending, because we don't know what they are doing. In our survey, our audit report, which was just their responses to our survey, we've got a lot of answers that could lead to some conclusions. But that survey, of course, was from a certain point in time, basically March of this year. The banks that responded to the survey, 75% of them said that they had not yet allocated or spent all of their TARP funds. Since the time of the survey, another 200 institutions received TARP money, including insurance companies, which frankly I don't think anyone expects is going to be using the money as part of their banking subsidiaries that entitle them to receive TARP funds. So it's very difficult to answer the question of why are they not increasing lending if we don't know what they are actually doing with the money. And the only way we can get that on a more timely and regular basis is if Treasury adopts our recommendation and commits itself in deed as well as in word to maximum transparency.
In your crystal ball, do you suspect that they are perhaps paying out lucrative bonuses or paying off debt? I mean, what do you think is happening?
Well, based on what we saw from our snapshot back in March, they're certainly using it, a certain number are using it to pay off debt, and different types of debt. Some paying down lines of credit with the Federal Reserve with TARP funds. One smaller institution reported to us that in substance they were planning on using the TARP money for one purpose. I think it was to increase lending. But right around the time they got their TARP funds, they got called a line of credit that they had with another financial institution called in, and they ended up using substantially all of the TARP funds to make good on this money that they had borrowed from another financial institution that they may have had real trouble paying back but for the TARP funds. So we get glimpses, at least from the dates of our survey, as to what happened.
Well, on another subject, how do you see the private program of AIG, the systemically significant failing institution program, as having worked to the advantage of the taxpayers? AIG is the only company to receive funds under this program. We own 80% of the company, yet allow fire sales of the most valuable assets which are on the insurance side of the company. Why do we do this?
That's a question I think is better addressed to Treasury than to myself. It's hard to calculate what would have, it's very hard to go back into the old Wayback Machine and know exactly what would have happened if we had not bailed out AIG through the Federal Reserve or through Treasury, and what the implications and ramifications would have been. Certainly from some folks' perspective, those who were responsible for the bailout and those at AIG warned that the consequences would have been disastrous. But of course, it's hard to really know, to go back and know exactly what would have happened. What we have to do and will continue to do in our audits of AIG is to try to bring transparency to that decision-making process and transparency to what's happening over there, and we're going to continue to do so.
Who do you think are the recipients of these below-dollar deals?
For AIG, for the sale of AIG assets?
Yes.
I think AIG has disclosed some of their sale of assets, and to the extent that they have, those are included in our report.
Thank you so much for your answers.
Thank you.
Thank you very much. I now yield to Congressman Dreyhaus.